Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
Eric, lots of things happening in the world. You and I were talking about things that have happened this year that have been significant, though. And there's been, for the most part, not that much volatility. But one thing that has been really interesting since the beginning of the year, how Bitcoin has just been on a tear. How much do you think ETFs have had to do with that?
Certainly. I get booed at on Twitter when I tell the Bitcoin people that Bitcoin would be trading at $30,000 if it weren't for the ETFs. So right now, Bitcoin's around 70,000, and they don't like to hear that. But I'm telling you, when BlackRock filed for the ETF last June, it was basically like a year ago, it went up 80% on the anticipation. Then when it launched, there was a little pullback, but it ripped further. So I think it's up something like 40% since then. So it's 80 plus 40. A lot of the 40% was based on how the ETFs were taking in money. And this past couple of weeks, it's been crazy. Like this whole area is, to quote the Paul Abdul song, 2 steps forward, 1 steps back, which I don't know if you got, it's a deep cut from like the 80s right there.
I'm from
but
the 80s.
Anyway,
I know that. I know the cut.
Yeah.
But what
Opposites
does it mean?
attract.
What does it mean here? I want to hear you connect
That's a great question, Joel.
ETFs
Joel,
and Paula
actually,
Abdul.
I forgot. I went too far off the highway. I don't know where I am anymore. No. So what does it mean? That is really funny. That's naturally funny. I get what you're saying. Hold on. Okay, now I'm going to answer that question. Yeah, so what I mean is like there's like 2 or 3 weeks of like intense flows, and then there's a little pullback. Then there's like a week or two where there's some outflows. Then there's like 2 or 3 weeks or a month of inflows. And so it's 2 steps forward, 1 step back this whole time, but you are netting 24 billion in new net money, even beyond the GBTC outflows. So 24 billion, just to put that into context, James and I, Sayford on my team, we thought these would get 10 to 15 billion in their first year. So they're already 9 billion beyond our upper band. So I think that what happened here was just that there was a lot of investors out there who were afraid, even if they were casually interested, they were afraid because of the FTX downfall. Who can you give your money to in order to get this exposure? Well, along comes BlackRock and Fidelity, and it's like, oh, I know these. I use all their products. I completely trust them. So the ETFs brought trust, and that was totally missing. Not only that, you got low fees and high liquidity. So this is like major. So it's not just that there was a little rally. I just think this is a really powerful vehicle that a lot of people just trust and like to use for this exposure. So I'm not surprised it's successful, but it's a little beyond what I thought. And so there's been all these interesting products now coming out that are ancillary. They aren't spot Bitcoin, but they do something similar, and those are hits too. So there's a bit of a feeding frenzy for anything that's sort of Bitcoin related.
And that's what we're going to talk about today, because the ancillary products, sure, there's Bitcoin, but there's also things like MicroStrategy, and there's been multiple entrants. And when the first one came out, Bloomberg Intelligence called it most volatile ETF. How come? And how does MicroStrategy fit into all of this?
Yeah, we've used the phrase hot sauce plenty of times on this show. This is like a ghost pepper. This is the ghost pepper of the hot sauce bucket, okay? This is where you invest in it and you film yourself on YouTube seeing how you react. It's very volatile, Joel. So to give you some numbers, we're talking like 170, 180% volatility. To put that into context, the S&P is like 10, 11%. So it's like 16 times the volatility of the S&P. But there is definitely people who are hungry to trade. And so this pushes the envelope on volatility. But at the same time, it's not just some random stock. It's a stock that a lot of the crypto world really enjoys trading. And so if you think about it, this was actually a clever way to make a 4x Bitcoin ETF, because MicroStrategy is 2 times the volatility of Bitcoin and highly correlated. And these are 2x MicroStrategy. So you're looking at a 4x Bitcoin ETF, which is, again, a powerful concept, because there's not just people using this product. People like leveraged Bitcoin trading all over the world. It's very popular. There's all kinds of derivatives being used. So this, again, the ETF industry is famous for democratizing stuff that might be happening elsewhere. So here you have, again, a democratization of a very leveraged trade on Bitcoin, which is popular elsewhere. So I'm not totally shocked it's popular here. But these two products were instant hits to the point where they're both around the top 2% in terms of all ETFs in volume. Wow. I mean, so in other words, they launch and they're instantly in the top 2% most traded. That's crazy.
All right. We're going to speak with Sylvia Jablonski, who's the CEO and CIO at Defiance ETFs. Her ticker MSTX, which launched in August. This time on Trillions, you want volatility? We got some volatility. Sylvia, welcome back to Trillions, because you have, as you reminded us, you have been here before.
I have, and thank you for having me again.
Great to have you back, and in a new capacity, because I think last time you were not at Defiance, you were at Directions, and that was a number of years ago. Yes. So welcome back to the podcast. Eric called your product Ghost Pepper. How do you feel about that?
I feel good about that. I actually, which may be surprising to some, but I actually think that that's an accurate description, right? And it could be, the range of descriptions for levered and inverse ETFs in general, right? You have some that are kind of like mildly spicy, and then they go all the way up to ghost pepper. And I would say that we're on the ghost pepper side. So it is sort of the perfect recipe, though, for a levered ETF product. You have this high level of volatility, as Eric mentioned, and a lot of interest due to the underlying sector being crypto related, and lo and behold, it really did take off. The good thing, though, is that it's kind of being used the way it's supposed to. You kind of see that volume and that turnover being quick, a day, less than a day, things like this. And so in that sense, it's kind of okay that it's ghost pepper.
Yeah. So when did you get the idea to be like, what we need is to effectively do what Eric said? We need to go 4x Bitcoin. Where did you first identify that would be a thing that you would want to do?
So this might be super interesting to you, but the initial name of our company, like when you look at the founding documents, it was Crypto Beta LLC. And when we were at, Direction, working with levered and inverse ETF products, the chairman and original founder, Matt Belsky, was talking about, how he was going to go leave and start a crypto company, basically. And it was, sort of just way too soon. That was a period of time where crypto was just, taking off, but there was no sense that you could put it in an ETF. You could put it in like a democratized wrapper that, a BlackRock was going to be launching a product on it. You just couldn't get it out, basically, right? And so, for years we've tried to get into the crypto game, but it was oftentimes that, we were either too late or not the first mover when it came to a Bitcoin ETF or a levered Bitcoin ETF. And we knew that we couldn't compete with the likes of a massive institution like BlackRock. And so we just started looking and thinking to ourselves, like, okay, so Bitcoin did really well. There are levered and inverse ETFs. There are single stock ETFs. Where can we play? What else is crypto related? And we started looking at the performance of just the MicroStrategy stock as compared to Bitcoin and Bitcoin ETFs. And, throughout history, we call it like 4x leverage, right? But throughout history, it's been like 6 times the performance of crypto in trending markets, or 3 times, kind of depending on, when you run that comp. And we saw the stock, we were like, okay, the stock is up 300%, right? And it's a crypto company. It's democratized crypto built into an equity. And so we thought, get this to market, lever it up. Best crypto play ever.
Let's break that down just a little bit, though.
Okay.
In case somebody's not familiar with MicroStrategy or its business model, I don't know if it has a business model so much as it is just a vehicle for Bitcoin at this point, right? Can you explain that?
Yeah, so MicroStrategy was kind of historically this software company, right? And you can argue that they play in AI, which I do think, kind of helps. They have that overall AI theme. But Michael Saylor's goal was always to kind of scoop up as much Bitcoin as humanly possible. And we just heard them announce that, over the next 3 years, they're going to be raising another $42 billion, which is, I think more than they actually have in total right now of Bitcoin. And so what they tried to do is create this access point for investors to buy their stock and have more crypto exposure than they could ever get on their own, right? Like, can you imagine having, 42 billion of exposure to Bitcoin? You can't do that on your own, right? And And the fact that it's a stock, the fact that it's, traded in the marketplace, it has liquidity, it has transparency, you can get in and out of it whenever you want. People started buying it to have exposure to Bitcoin. And then we also noticed that people started trading it in and out short term. And so we thought there would be appetite to put leverage on it. And that's, kind of how the ETF was born.
Now, one thing interesting about this, and we call it the hot sauce arms race, because there is a lot of competition out there for this area. One reason is, they charge a little more in the fees here, and you just need one hit. We had Will Rind on, Joel. His 2x NVIDIA ETF. Guess how much money that makes a year? I'll tell you, $60 million. You can see the magnet to do this, as opposed to like trying to go into the core and compete against BlackRock and Vanguard. So I totally get it. And there's definitely a market for this. So when you guys came out, you were 1.75x, and then Tuttle, and then you launched at 1.75x, which again is still pretty volatile given how volatile MicroStrategy is. But then Tuttle filed for 2x, Matt Tuttle and T-Rex. And then you guys launched, you get all this money really quickly, all this volume. He launches, and I'm like, rarely, if you're like 4 weeks late on a hit product, it's over. Like you cannot, the ship has sailed. It's very difficult. But he launched and kind of tied you. You both got an equal amount of assets and volume. And then you filed, and now you're 2x. I guess what all took shape there? And is 0.25x extra volatility really that much of a deal breaker?
I mean, so there's a little more to this story. So actually, we had originally filed for 2x, right? And there are different rules that you have to meet in order to launch an ETF at a specific leverage point. We call that, it's basically called a VAR test, and it's kind of, this inside baseball stuff where, you have to kind of like prove what the value at risk is, what the basket and the index that you're comparing yourself to is, and things like this. And so there were periods of time before we launched where we wouldn't have passed the VAR test based on the index that we had been using to, submit for VAR. And so we filed, we were approved at 1.75, but we were right there with 2 beta, right? And then we kind of thought to ourselves, like, let's get this product out because this is hot sauce and people are going to want this and trade this. And, and as soon as we got it out, our clients and traders started saying, we want 2x, we want 2x. And at that point, the Rex filing was out there, right? We assumed that they were going to launch the ETF. And before they launched the ETF, we actually filed to update the leverage point to 2 beta. But, that takes 60 days, right? So their launch came before our leverage change. And so I think it was this interesting race, right? Because we knew we had to get out. We also knew that the 2x wouldn't come into effect, before they launched. So we had the 1.7 out. We gathered all the assets. They came out with 2. And basically everything our clients said was true, that people preferred the higher leverage point. And then you saw our inflow slow down a little bit. You saw them kind of take over. And now we've changed to 2x. And over the last couple of days, we're getting a little bit more in terms of inflows than they are. So, long story short, I think the 2 beta mattered. And we're like, sometimes we get praised for it and sometimes we get criticized for it. But we're very nimble as an ETF provider. Like we don't take our, we actually had the ticker IBIT, and it was a short block ETF, and it was out around the time that, FTX collapsed and all of this stuff happened. That ETF was up 30% every other day and nobody traded it, right? And we kind of knew like, okay, the market doesn't want this, and we moved on from it. BlackRock has that ticker now. It went a little better for them. But, what I would say is, we knew that like we had come up with this awesome product, but the people wanted more. So we gave them more.
How much has the Trump trade factored into what these inflows have looked like, do you think?
I think it's like anything else. I always find this conversation so interesting, when it comes to like, what's the playbook for the election, because like usually nothing happens for if you look like a 6 months to a year out in the stock market, it kind of like reverts to the mean after whatever reaction is there for a couple of days. And then maybe as policies start changing and things like that, you see things happen over years. But there's certainly this thought that, Trump is obviously like Republican government will be, less focused on regulations and things like this. Maybe there's more room for crypto to grow, and there's more leniency to have crypto, invested upon different platforms and things like this. So, and the fact that he went to the crypto conference and said, I love crypto and Bitcoin, I think that's going to help MicroStrategy. I think that's going to help Bitcoin.
When you think about where the year began, or even let's go back even slightly longer. I mean, Eric mentioned Sam Bankman-Fried and the FTX thing.
Yes.
To be where we are now and see the crypto rally be where it's at. When did you think you might, looking ahead here, there might be something more that the world needed that could be a MicroStrategy 2X ETF?
I mean, right then, Eric said it, like the minute that those ETFs came out, all of a sudden there was this massive loss of just trust, right, in crypto from retail investors. And then for sure, institutional types of players that have, rigorous due diligence, and they probably had to they were probably told, like, get out of this now, right? But I think, he made the point, like, as soon as it became like democratized and it became launched by companies that people trust, Fidelity, BlackRock, we just knew. And right away, we were like filing for things and trying to find ways to get exposure to crypto. And this was, a great idea that we landed on here. But
does it matter that it's still not clear what it's really for?
So, we get this question a lot. Like sometimes we'll talk so much about the rise of crypto and then somebody will say, hey, what is it? What do we do with it again? Why is it here? And I think it goes back to, like there are two things. One, you can be an investor because you believe in the utility of it. You believe that it will be used in some way, whether it's for trade, whether it's, digital gold, whether it's an inflation hedge, whether it's because it's good to have this decentralized asset away from central banks. And those are, kind of like good reasons that people buy into why they should hold, trade, buy crypto. And then there are other people that will just, kind of flat out tell us, I still have no idea if any of that will actually come to fruition, but I see that this is an asset class with a high level of momentum and volatility. And so I trade it for the technical reason. Mm-hmm. And, even like the largest institutional clients will tell us like my 5%, and you guys talk about this stuff a lot too, right? 5% of your portfolio is to have some fun to allocate to an asset class that might not be along your map and take a gamble at it.
Yeah, no, the Bitcoin, what is it for? I went through a lot of this, as a tourist in that world. But I think also one thing that opened my eyes was like in other countries, especially the emerging markets, like these governments have just annihilated their currencies. Like they're worth nothing. The US does that to a degree, but it's not as pressing of a need here. I just think over time, it's something that the government cannot mess with because it is truly decentralized. And people like to have a little of something that they can't, mess with, because obviously printing money is a very easy way to solve problems. And so I get that. I also think that it's 16 years old, right? The white paper was 16 years ago, written by Satoshi. And so I do call Bitcoin gold as a teenager. Where they used to make those movies like Young Einstein and stuff like that? This is like young gold. So it's 16 years old. It's got attitude. It's stealing the car. It's very volatile. So I just think it's kind of the best of both worlds. You've got this store of value, but you've got something that's hot saucian. Whereas gold is very boring. It can go up, but it's not that volatile, which is a plus for some people. But in this case, I just think the hot sauce volatility is a feature, not a bug in this case. Speaking of that, one thing you guys have on MSTX and MSTU, which is Tuttle's, is options. So Think about this, Joel. You can't get options on spot Bitcoin ETFs. We do think they'll be approved in the next couple months, but right now you can't do it. But you can get options on what is effectively Forex Bitcoin, which just shows you how sometimes regulation isn't as logical as you'd like it to be. I mean, if you add the volume of you two together, you trade like as much as Netflix every day. I mean, this is clearly there is a market to trade in this stuff. And I wondered if you want to talk a little bit about how, like, who uses the options, what that's for, and how that market has grown also.
Yeah, sure. And another great point to just add to what you said about, kind of like the teenager and gold is that the two are also in scarcity, right? There's a limited quality, limited quantity in the world of both, gold and crypto, which is, digital gold. And I think that's why they sometimes get married together. But so in terms of the options, I think, we have investors using them for many, many reasons. Like first, it's to, hedge their crypto exposure, whether it's Bitcoin exposure, whether it's MicroStrategy exposure, or whether it's exposure to our actual ETF. Other times it's finding ways to get more leverage on the leveraged ETF. And other times it's to actually, get exposure to an underlying, crypto index. And so the options growth has been massive. I actually have never seen, I don't think, and this is like, coming from a past where I covered like Nugget and Dust and like highly volatile ETFs. I don't think I've ever seen options list so quickly on an ETF in my career. And that doesn't mean that that's right, but they happened incredibly quickly. They came out incredibly quickly, whether it was like the weeklies, the monthlies, and, so I think it's just another tool that allows, traders to kind of manage this exposure. But I feel like the options are used mostly by, and I could be wrong about this, I think like it's picking up with retail, but just seeing the size of trades and things like that, I think a lot of it is like market makers too on the options.
Yeah, no. To me, options are like a bunch of new colors to paint with. Like it just gives you more. You can sculpt what you want a little more. I get it. It's just gives you other dimension to your investment. So you definitely get a little of that because of the
turning into a little artist there.
I know. Thank you. I dabble.
Yeah, I can tell. It's another dimension there to Eric Balchunas.
I know. Well, we're gonna have bring your art to work day.
Okay. All right.
But anyway,
can't wait for that.
Maybe we don't even want to know. Maybe some things are best left at home. One thing that me and my team have debated, Sylvia, is that both of them were such an instant hit, and it's weird. Normally, like even the 2x NVIDIA ETF, which is really popular, it took like a couple months for it to start to trade over like $1 million a day. You guys are in the hundreds of millions after a week or two. It's weird. And so we were wondering, is this because these are ghost pepper like volatility? Like they have just pushed the volatility boundary to another place? Or is it just the crypto crowd loves trading around MicroStrategy? Like, what's the bigger attraction? The heightened volatility, again, it's the most volatile ETF in America, or the crypto part? Like if, let's say there was a stock more volatile than MicroStrategy and you 2x that, do you think it would be a hit just the same? Or is this more of a, as we said at the beginning, a spillover effect from the popularity of Bitcoin?
I think both. So I do think that if you launched a more volatile stock, it would take off in a similar way because volatility for levered ETF, like the secret sauce, I think, for a levered ETF is kind of like retail sentiment and volatility of the underlying. And a lot of the ETFs that have that recipe have taken off. The second thing is I think at first when single name leverage ETFs came out, it was kind of like ho-hum, right? We didn't see anything happen for a little while. Like, I mean, there are a few of them out there that are so good that still haven't taken off. And I think that it's a newer concept for retail investors to look at these single stock ETFs and get into them. So I think part of it is like seeing the success of that NVIDIA one kind of opened up that marketplace. But, absolutely. Like number one, I think it's because it's crypto related and it's MicroStrategy and it's Michael Saylor. And number two, I think it's volatility. And number three, I think it's because people have started to embrace single name leveraged ETFs. Like think about all of this time since that first single name levered ETF had been filed, like nobody really put that much out into the market, right? And now the filings have picked up like crazy. I mean, it's hard to find a name that doesn't exist. I mean, we're always looking at it and we're like, dang, every ETF is taken, right? So it's just also grown in popularity and awareness, I think.
Also helps that market has generally
and the
gone
market
up this year.
Yeah, totally. Risk risk on and all that. Rates coming down. I mean, that's part of it too.
Yeah, no doubt. This stuff definitely has more. You see more products and more volume in a bull market.
Yeah.
That said, like the triple leveraged Qs have hung around through many downturns. So if you get enough volume in an ETF, you're pretty much set for life. I think you guys are both good for a long time. Some of the other ones I think are going to close
What about for traders?
Yeah.
When you kind of have a chance to like see how the product's being used, are there things that make you wince, or also, or that you're like, wow, that was like exactly how you could have used it, right? I'm curious when you have a chance to see that. What's your assessment, Ben?
So if you asked me this question in I kind of got into this business in 2008, into the levered inverse ETF business. So if you had asked me this question in like 2011, 2012, it would be a wince for sure. I think that the education at that point was pretty nascent. There were investors coming into the products that didn't understand how to trade them. I mean, now I feel like everyone gets it. Like the levered inverse ETF providers have done such an awesome job putting the education out there. The platforms have the, hey, trade at your own risk. So the biggest thing is like, do people understand that they have to make a decision both on the direction of the market and the direction of volatility, right? Because range-bound volatility is terrible for these things, right? So when you have range-bound vol, you want to be a day trader. When you have a trend is your friend. You can hold it for a little bit longer, but like every day, understand that yes, compounding is working in your favor, but you're, kind of now have more, apples in the barrel than you did the day before. So I think that I'm kind of like comfortable now with kind of believing that the education is out there and people know how to use the products. And we don't promote them as like long-term investments. No levered, like Tuttle doesn't do it, Direction doesn't do it, ProShares doesn't do it. And so I think like the education's out there. And by the way, there's like, this is so interesting because around the time of the derivatives rule, we did so much work to, kind of like provide input on what we thought levered inverse ETFs were and like the risk level and things like that. I mean, there's way more leverage in other things and other like even like fixed income products and futures and things like this than there are in, levered inverse ETFs. And also, they don't take up that much of the daily trading. Like at the open or the close, people thought that the rebalance must be, half of the day's volume. It was like 2%. It was not even 2%. It was like between 1% and 2%. And so I think a lot of that is now out there, and I'm kind of like less surprised now of people using them.
All right, Sylvia, how many products, ETFs, have you brought into existence, and where would you rank this one when you step back and think about your trophy, your haul of trophies?
Yeah, I mean, it's hard to say. Like, I'm not one to like take credit for the ETFs that our firms have launched because there's so much, like whether it's at Direction or Defiance, like there's so much back and forth, amongst like a million people who work at the company. I would say we've had, like at Defiance, we've had a 60% hit rate in terms of, ETFs that become profitable. The ones that, some of the ETFs we have are haven't, they're in the ETF graveyard because they weren't profitable and people didn't trade them. But I mean, this is definitely our number one. One
other interesting thing about this. So we have 2x MicroStrategy here. But before these existed, believe it or not, they had 3x MicroStrategy in Europe.
Yeah.
Europe's kind of weird. Like they're just, I don't know, the rules are just really relaxed for anything outside that UCITS program. So anyway, they have a lot of crazy stuff over there, but nobody cares.
Nobody trades it.
Athanasius and I always talk about how it's just the wrong market. You launch something like that over here, man, look out, right? So there's like a 5x Qs in Europe. Have you looked at Europe for like ideas or I guess what's your take on like how the US culture is just so much, the appetite's so much bigger for this than in Europe where they have this and then some?
Yeah, it's so interesting because I've been like in levered inverse ETFs for a long time now, and I've traveled around the world, whether it's marketing products or trying to get them listed on foreign exchanges and things like this. And I can tell you that like Asia, ETF lovers all around Asia. You have like Mexico loves leverage. In Europe, like, I mean, I've been part of this too, listing levered ETFs on the exchange there, on exchanges there. None of them ever took off. And they were, $2, $3, $4 billion ETFs in the US. And when we listed them overseas, nothing happened. So, I don't know. It's interesting to me, but it's funny because when we were going to launch MicroStrategy, we kind of looked at that and we were like, well, that's there. And it's like this thing could this thing flop because nobody's even touched that thing. And it's just, I just think that there's a different level of risk appetite. There's a different, I think that the mindset there is a little bit different. It's kind of like save for retirement forever. Here it's do that, but also, also like retail loves trading and day trading. And we have like a big, social media culture now around trading. So I just think that they're, I don't want to say behind, but the popularity has fallen behind the U.S. and Asia for sure.
Joel, I was actually in Europe recently, and I have my hot sauce PowerPoint slide, which has like literally these Tabasco containers with different hot sauces in there. And when I got to that section, I could tell like they weren't there. I could just feel they're like, I don't really get a lot of this. And I said, this is sort of like sports gambling. And I said, you guys have gambling on your phones? Like they're just like, it's just a different culture there. You're right. Asia, though, they love this stuff.
Yeah.
In fact, they might even be more into this than we are in certain Asian countries. So it's just interesting sort of insight there into what works in different countries. But I think it's interesting. Like if you launched the 3X MicroStrategy here, I mean, it would probably be a bigger hit than the 2X.
Oh, we would have if we could, but derivatives rule.
Could you launch an ETN that's 3X? Because like RecShares has a couple 3X energy ETNs.
Yeah. You could, but we've just found that like if you look at the assets in the levered ETFs, they're just so much higher than they are in the ETNs. And people worry about, the counterparty risk. And with this particular, it's challenging to get swap exposure on very volatile underlying assets. And then so to get a bank to give you a note on something, as ghost peppery as this is just challenging. So I just don't know that, it would be like for that reason, I think people would be worried about the risk of the counterparty. We might not even find a counterparty. And, the ETF is just a better vehicle for this stuff.
What other ghost peppers are you thinking about growing in your garden?
I can't tell you what we're doing just because it's not public yet, but in the next 2 weeks,
have to ask,
no, for sure. But in the next 2 weeks, you'll see some filings from Defiance, and one of them is inspired by Mr. Eric Balchunas himself. And I've been like dying to tell him what it is, but I can't because it's not filed yet. But keep an eye out because I think it'll blow your mind.
Ooh, all right.
I'm trying to think what it is.
Yeah.
What do I talk about that doesn't exist? I don't know.
You'll get it. As soon as you see the filing, you'll be like, that's it. That's the one.
That's the one.
That's mine.
All right. I'll ask him. Sylvia Jablonski, thanks for joining us on Trillions again.
Thank you for having me.
Thanks for listening to Trillions. Until next time, you can find us on the Bloomberg Terminal, Bloomberg.com, Apple Podcasts, Spotify, or wherever else you like to listen. We'd love to hear from you. We're on Twitter. I'm at Joel Weber Show. He's at Eric Balchunas. This episode of Trillions was produced by Magnus Hendrickson. Bye.